Look, I believe that there's a massive collapse coming, but I would expect, and I would not be surprised to see gold touch 6,000 at some point during the year of 2026. And I do firmly believe that this year will be probably a pretty ugly year because you're seeing a lot of these things finally come out to roost.
I'm very pleased to welcome back to the show Todd Bubba Horwitz of BubbaTrading.com. Bubba's been on the show quite a few times before, but it's been a long time since he was back, and we're going to revisit his calls and get his outlook for 2026. Tell us about what's up. Welcome back. Good to see you, Bubba.
David, great to always be with you, and it's always a great show, and I look forward to our conversation today.
I very much look forward to it. Let's just start with 2026. What are some of your highest conviction bull calls for 2026?
Well, I think you can count on the precious metals continuing their rally. Now, again, there will be some pullbacks. Let's not be silly like they're going straight up. But I would expect, and I would not be surprised to see gold touch 6,000 at some point during the year of 2026. I wouldn't be surprised to see silver hit over 80, and of course, platinum is on a run that we haven't seen for a long, long time. And I would expect those to continue to run because we've got massive inflation, although the numbers don't show it, but the numbers are not accurate. You've got a lousy monetary policy, which will create problems, and you have what we call a K-shaped economy, which, again, we know that only the upper 10% or so are benefiting from anything that's going on. You've got big loss of jobs. I think the equity markets, after being up double digits the last 3 years in a row, only once in history have they made it 4 years in a row, and I don't think it'll be this year.
Well, let's talk about gold. You brought that up first. The fact that gold has already surpassed $4,400. In the past, it's never sustained a top like that for that long. If you look at how it's performed in 2021, for example, from 2018 to 2021, it's up about 70%, and it didn't stay there for very long. If you take the trough from 2023 all the way up to now, it's up 171%. So it's even surpassed the bull run of the last bull cycle. Let's take a look at what happened in 2011. 2011 from 2003 all the way up to 2011. Yeah, that's a much bigger bull cycle. But the point I'm trying to make, Bubba, is that every time gold has hit a high like this, we're gone parabolic. It hasn't stayed there for very long. What's different this time?
Well, I don't know that it's different. I think there will be some sort of a pullback, but I think overall we'll find a level of new support and see buyers come in. I think what's different about the economy today than 2011, which you brought up, and of course I was trading on the floor in those days. I think the rally then was easy that it was going to sell off because the economy was still in relatively good shape. Now, with all the monetary policy and what's going on with the Federal Reserve and their ridiculous policies, you're seeing more of a run to the precious metals. You're seeing that flight to safety for inflation, not for equities, but for inflation. And I don't think inflation is coming down, David. I think when you look at the bigger picture and you go back, if you go back just to 1985, which is 40 years ago, the average house was 25,000. Excuse me, the average income was 25,000. The average house was 75,000. In other words, 3 times your annual income. Today, the average income is 70,000. The average house is 500,000. So it's almost 7.5 times your income, which is telling you that nothing is keeping up with inflation other than the precious metals. And I don't see, with the bad monetary policy and massive amounts of debt that's being created by the government, I see no reason to believe that they're not going to continue to accumulate gold, especially the central banks, which we're watching this happening right in front of our eyes. And look, like I said, there will be pullbacks. I never think any market's going to go as parabolic as they are going right now. But at the end of the day, new money buyers will come in, and I think they'll push these up. You know, if I go back in history, when I first started trading on the floor, the Dow was 800. Now it's 48,000. So think about that, and I think gold will do the same thing.
When you say the economy sucks, is that because of the affordability issue that you're just talking about?
I think there is no affordability for the average American. I think you're seeing a lot of jobs being wasted and gone. We just had, between UPS and Amazon, they laid off over 70,000 employees, and Amazon's talking about laying off over 500,000 employees in the next couple of years. And those jobs are not coming back. You may be a big fan of AI or not, but AI is destroying jobs, which brings in the real possibility of universal basic income in this country. And you know who pays for the universal basic income is the taxpayers. We're already overtaxed as it is. And you've got inflation that continues to rise. And only are we getting a break right now because of the price of crude oil. But when you think about crude oil, you go, wait a second, if crude's going down and there's not a demand for crude, then how good can the economy be? And that's what I convention on, is with a lack of demand, because crude oil is about, or fossil fuels are about 80% of the economy, from the plastics that we make, from the cars we drive, to the delivery to the stores. And if that is collapsing, which it is right now, that tells you the economy is pretty weak. And I think the economy is very weak for the average person on the street. The middle income guys are not existing anymore, and they're having trouble surviving, not to mention the amount of debt that they're allowing them to build right now. You have credit card companies offering no payments until 2027. So think about that. That if you don't pay it when the bill comes due in 2027, the interest rate goes back to day one at about 30%. You can never get out of debt. And that's very much like our government can never get out of debt.
What does the average American need to do now to stay ahead?
Well, they need to be obviously invested in something. I wouldn't chase markets, but they have to, pay off their debt. The biggest problem we have is credit card debt, right? People continue to borrow and then they pay the minimum and they can never get those debts paid off. I mean, think about it from an investing standpoint. If you have credit card debt, you have no business investing in a market, because you're not going to get a 30% return over the period of time that you're paying on your credit card. So I think the first thing Americans need to do, or citizens need to do of any country, is get your debt taken care of and get your debt under control. Because if you're building debt, you end up in a vicious cycle, very much like our government is in a vicious cycle of debt that they'll never get out of, and they have to keep making adjustments with the interest rate market, talking about 50-year mortgages now. We've got 100-year bonds in some places in the world right now. The first problem for any person is debt. Get rid of your debt so that you can actually put money away.
Easier said than done when the credit card spending is on the rise. Why do you think credit card spending is on the rise, by the way? You look at the credit card nominal value in total terms, it's the highest it's ever been, and it's just going higher. And there's different theories. Just this: one, people have the ability to spend, so they're spending more, or two, they need to. What's your theory?
I don't think they have the money to spend. I think they're using their credit card as almost a borrowing service. And again, when you have credit card companies allowing extended payments out 12 months from now or 20 or 15 months from now, I think that becomes the bigger problem. People are more willing to spend, assuming that they'll be able to pay that money back when it comes due. And we all know that they're not going to be able to pay it back because they're overspending. We create an overspending society that people don't take the time to realize that they can't afford what they're buying. And the first thing you got to worry about is taking care of your family and taking care of your food. And of course, we just saw retail sales, from the holidays, which exploded. Now, the real question is not what were the sales numbers. The real question is going to be when they report profits, was there any profit, or was it a lot of dumping of goods at very low prices to create and stimulate more buying?
The move we've seen in December 2025 in precious metals, especially in silver, is the most historic rally ever. Gold just hit $4,500 for the first time in history and was up almost 70% in 2025. Gold has added nearly $13 trillion to its market cap in a single year. Silver has just briefly surpassed $80, up 150% in 2025. I'm going to tell you today that the physical bullion is not the only way to be exposed to the metals. Today's sponsor, Argenta Silver, that's ticker symbol AGAG on the TSXV and AGAGF on the OTC exchange for U.S. investors, is another such option. Argenta Silver is a pure play silver company operating in a historic silver bull market in Argentina. Only 1% of the land package has ever been drilled so far. Mining mogul Frank Justra and Argentinian businessman Eduardo Elstein together own roughly a quarter of the company. The previous owners of the El Cavar project spent an estimated 60 million Canadian dollars on the project, discovering the third largest pure silver deposit in Argentina and building a 100-people camp. Argenta then purchased this deposit for only $3.5 million US in September 2024. The pure silver deposit contains silver resources of 45.3 million ounces at 482 grams per ton indicated, and 4.1 million ounces at 417 grams per ton silver inferred. This is already the third largest undeveloped pure silver deposit in Argentina. Argenta Silver now has a significant cash position, roughly $18 million in working capital, and they are drilling as we speak, so results are imminent and will continue to come out for the next few months.
The flagship resource and project are situated in Argentina's top mining jurisdiction, the Salta province, which has been voted the best jurisdiction of Latin America by the Fraser Institute in 2023. Do your homework on Argenta Silver today. That's ticker symbol AGAGF on the US OTC exchange.
And what do you do as a trader when you are encountering this concentration risk that people have been talking about over the past couple of months to this year, basically, within the S&P 500 itself? The fact that it's so concentrated within a few tech companies that's driving the entire market. What do you do as a trader?
Well, I think as a trader, I mean, you stay I stay in the market, okay, and I stay invested always, but I also hedge my position using derivatives and options to hedge my equity portfolio. But then, of course, from a trader standpoint, again, I let the market direct me. I'm not going to hold anything long enough, but it is a very big concern that you have 5 or 6 companies that are really dictating this massive rally we have, because those 5 or 6 companies that are driving it, NVIDIA included, are kind of playing a shell game with their earnings and with everything else they're doing, because they're creating a lot of spending to their own companies, which inflates their earnings. Look, I believe that there's a massive collapse coming, okay, as we've had in the past. It's not something new. I've called for this for over a year, so it's not like I'm on schedule, but I'm not trying to time it. But certainly, I would be looking for safer investments right now. I'd be interested in putting my money in precious metals right now. I'd be interested in putting my money in CDs right now. If you're in the market, then I would protect it, and which is what I do. I'm 100% invested in equities, but again, I know my exact amount of risk that I'm in for, and I'm going to accumulate more assets when the markets do come down. And I do firmly believe that this year will be probably a pretty ugly year, because you're seeing a lot of these things finally come out to roost, and we'll see how it plays out. I mean, again, I can't make any exact predictions, because I would be a fool to say that, well, we're going down by the first quarter. But I wouldn't be surprised if we have a sizable haircut next year.
If we get a sizable haircut, doesn't that mean precious metals are going down with stocks?
Not necessarily. It depends how it happens. Now, again, I do expect a little bit of a pullback in precious metals, but when they sort themselves out, okay, I think that precious metals will be the place where people will go. Because remember one other thing: the fiat currency system that we all live under, okay, is a manipulated garbage that is controlled by the central banks. I believe that if things happen or I think they happen, you may at some day need to have gold and silver as a currency again. If we get as ugly as it can get, you may need gold and silver as a currency. So I expect those to continue. Now, the initial sell-off, listen, there's nothing safe. If what I think is going to happen happens, no asset class is safe in the initial part of the sell-off. Because the first part, you see the panic sell, and then you see people reaching for strong assets they have, like gold, like silver, like platinum. They start selling those to cover the margin calls of what they have. But overall, I believe that gold and silver will be able to maintain, and I don't think they'll have a massive collapse in gold and silvers. I think you'll see, I expect to see 40 to 60% in the equities. And I'm not saying it'll be all next year, but I think over the next run will be 40 to 60% lower.
This is Kevin Hassett, Fed Chair candidate, saying that the Fed should be cutting a lot more aggressively. National Economic Council Director Kevin Hassett said Tuesday that the Federal Reserve is not cutting interest rates quickly enough, even though the economy grew at a much faster than expected pace in the third quarter. If you look at central banks around the world, the U.S. is way behind the curve in terms of lowering rates, he said. Do you agree?
No, I think he's an idiot. Okay. I mean, listen, look at Japan. Okay. Japan did what Hassett wants to do. Japan did that. And now they're at 260% debt to GDP. Okay. They want to bring the rates down because our debt is so high. Okay. Bringing rates down only creates higher inflation. And mind you, that lower rates do not necessarily benefit the American. Lower rates benefit the banks. Okay. And let's look back to the first rate cut when the 10-year notes were 3.99 when they made the first cut in September this year. The 10-year notes are now 4.12. So the 10-year notes have gone up. Your mortgage costs have gone up, even though the rate cuts have come into the banks, because it's the banks that benefit. The Federal Reserve is owned by the banks. It's supposed to be a private corporation, but we know what's going on. We can all see it. It's not like it takes a genius to figure out that it's being manipulated by government. But they want the rates lower to satisfy our debt, because they can't stop spending money that they don't have. which is why the Social Security system is in peril, which is why Medicare is in peril. But of course, you never see any problems when it comes to the SNAP programs or the welfare programs. They keep funding money. And of course, who pays for all that? Me, the taxpayer. Any taxpayer pays for all those programs.
You know what? Let's take a look at what's happening in Venezuela. Here's a protest. Some people here are throwing bolivars around. Worthless. There's a hyperinflation nightmare going on in the country, as you're probably familiar with.
Yes.
So when you say there's an inflation problem going on in the U.S., we're not going to get that bad, right?
Well, I wouldn't think so. I think we have a greater chance of getting into stagflation, which is the worst of all. I don't think we are too big until solvent to get into a hyperinflation. But of course, Venezuela is one of the few countries in the world that could have actually created a socialism program, and it could have worked. But of course, obviously, those at the top, Maduro and Chavez, stole all the money. But they did have enough money through their oil that they could have supported everybody, and they wouldn't have these problems. But we all know when it comes to money that greed tech steps in and they take it. But here, I think our biggest risk is stagflation. That's what I would think in this country is a stagflating economy. And I think we're watching it from the farmer side. The grain markets are getting hammered in comparison to inflation. I think that's a much bigger issue. Crude oil getting hammered in compared to what's supposed to be going on. So if we have so much growth and everything is so great, why are the most important key products that we have going lower in price?
Stagflation has been cited by Jamie Dimon as probably worse than just a recession itself, because you've got slowdown plus higher prices and less affordable and higher unemployment.
High unemployment, no jobs, and of course you all remember, well, you won't remember, but the 1979 with Jimmy Carter, when CD rates were at about 11 or 12%.
Yeah, and that was my next point about the bond market. How does the bond market usually react to it? Well, not usually. I mean, it's not like it happens every year, but to stagflation in particular, when you get a slowdown in higher inflation, how does the bond market react?
Interest rates are going higher. The bond prices will go higher. The yields will go higher. The bond future prices will go lower, which is what we've been watching, even though the Fed's been cutting rates.
Yeah, that usually means lower equity valuations. Then what happens to real estate in that environment? Do we go into real estate as a safety?
No, I think real estate's a big problem. I mean, it depends on the type of real estate, but I think overall, the housing market, I think, is in a major problem. You have already, like where I live in Las Vegas, you have builders that are overbuilt that are making deals on mortgage rates that are below prime, that are below market rate. Okay, but they're stuck with inventory, so they want to get rid of it. I think the housing market is overdone. I think the housing market, again, I think I would compare this situation very close to what happened in 2008. And I think we'll be looking at very similar to the same thing once again.
You were talking about banks collapsing like in 2008. Well, what are you referring to, Bubba?
I think banks are in trouble as well. I think the banks are over leveraged. I think they're being hidden because of the Fed cutting rates, but I think the banks are over leveraged. I think they've lent out far more than they're supposed to. I mean, that 10-1 is a joke anyways, but when you're a banker and you can borrow money from the Federal Reserve, and let's say we'll use a round number, you can borrow $1 million from the Federal Reserve, take that into your balance sheet, take that liability, turn it into an asset, and then re-lend out $10 million. So you're lending out money you don't have anyways. Okay. So again, this whole fractional banking, this whole banking system is designed for them to fail because listen, where else and what other business could you have that you could make a fortune, lend out as much money as you want, and if you fail, the Federal Reserve or the federal government's going to come and bail you out.
What do you think the retail investor is speculating right now? I'm not talking about long-term investing. I'm talking about speculating. Back in 2021, we used crypto as a gauge. You'll probably remember that there was a huge bull rally in 2021. Altcoins, meme coins exploded. Some of that happened last year, not to the same extent by a long shot. And now Bitcoin's down on the year when the S&P and NASDAQ are still up. And so now people are wondering, well, the people that used to speculate with altcoins and cryptos, where are they going now with their money, if they even have any to begin with? What do you think?
Well, I think that they're probably speculating in the 5 core stocks and the indexes, the Nvidias of the world. They're probably playing in the prediction markets right now. But I think a lot of that money has been wiped out from a lot of those people. Again, you speculate. If we go back to the internet bubble of the 90s, a lot of people made a lot of money during the 90s. But what happened is that they lost all the money that they made, but they still had tax obligations on all that profit that they made that they forgot about. And I think you're seeing very similar. I think that there's a lot less players. If you look at the overall volume in any market right now, if you look at what's going on with the participation, it continues to wane. It continues to get lower, which tells you that there's not as many players right now in these markets playing. And again, they're chasing momentum as always. And right now, the momentum is still in a lot of those, those AI stocks. But we'll see that I think, and you've already seen some of it. Some of the lesser have already collapsed and fallen apart. Now, again, I'm not predicting anything going to happen today or tomorrow, but you'll see when the weakness in the weaker stocks or the less capitalized stocks start to fall, the next step up is the big ones. And I think that we're going to see the big ones collapse as well, because I do believe that the consumer and the participation is out. And I think there's a lot of big issues and there's a lot of big money issues coming. But of course, it's Christmas time, so nobody worries about it now.
Well, what are the signals you're looking for before the seams start falling apart? Are you looking for margins compressions? Are you looking for example, Owl Capital didn't finance Oracle, more deals getting pulled out, or what else?
I think you look at more deals getting pulled out. I think you look for some trouble from the banking system. We continue to ignore it. I think you look at that. I think you look at the overall, again, I think you look at the stagflation component. If the farmers continue to get hammered and the grain prices continue to fall, although their input prices continue to rise, that's not a good thing. I think the jobs is another big thing that you're going to watch. If I'm right and we continue to see jobs gone, where are these people going to go? There is not like there's an overabundance of jobs. This is not the industrial revolution where anybody can go work on a line. This is a technical revolution which eliminates probably 40 to 50% of the workers to begin with, because most of us guys like me, I don't know what I would do now if I had to get a job. This is the problem, that when you bring this great technology and you destroy jobs, you destroy earning power, which means that the government may potentially have to bail you out, okay? Which means universal basic income. It's a very nasty cycle that we're looking at, especially with inflation still charging higher. And despite the fact that crude oil has come down dramatically, we're still seeing higher inflation.
I guess the Trump administration has to do something about inflation. What are they going to do?
I don't think they can do anything, David. I think the problem is and I like President Trump. I'll be honest. I'll put it right out there. I voted for him twice. Okay?
Yeah.
I think he does a good job. But at the end of the day, his willingness and his wantingness to continue to cut rates is a drastic mistake, because it does not benefit most of the population. Okay.
You don't think it's going to help the people who are going to lose jobs, help the labor market?
It does not help them. Okay. It creates higher inflation. The only thing that rate cuts help is the big money, the banks. Okay. That's the only, and the government debt. That is the only thing that lower rates will help. The average guy, you and me, the rate cuts aren't going to help us. Okay. We're not going to get a benefit on our mortgage rates right now. And I think that's the bigger issue that we continue to talk about is the way that, again, you have to somehow stop the government spending. It all relates back to the massive government spending. The federal government was never meant to be, for example, the biggest employer in the world. Okay. It was meant to be an overseer. The Constitution states that government should be run city, county, state, and the federal government overlooks it, but that's not the case anymore. And again, the massive amounts of debt that they create, the things that they're doing, the willingness and the wanting to have rates cut lower, which again does not help anybody. Okay.
Well,
except the banks.
One thing that the Trump administration wanted was lower oil prices, and they got that. This is a market that I know you follow quite well, crude oil. Yeah. And for the average American, they're probably looking at this and feeling pretty good about the situation. Since 2022, oil's down 53%. As a trader or investor in oil companies, probably not great news. But for somebody just going to the gas pump every day, assuming taxes at gas pumps are going up, this is good news, no?
No, it's great news from a pricing standpoint. But when you overweigh and look at the bigger picture, okay, the lack of demand for crude or for fuel tells you that the economy is slowing down. People are not driving as much. And again, it not only relates to your driving your own personal car, it relates to the goods being delivered to the stores. Okay, it means there's less trucks on the road driving, okay, but bringing less goods to the stores. So again, it's a very vicious cycle. It's great that lower prices. In fact, in Denton, Texas, oil is a gallon of gas is $1.95. Okay, but overall, there's good inflation and there's bad inflation. Yeah. And right now, the inflation we have is bad, which is driving some of the core asset prices lower, not because it's good for them. It's because there's a lack of demand, and a lack of demand in crude oil means that the consumer is actually struggling.
What's another inflation hedge we can talk about besides gold and silver?
Well, I mean, you can use derivatives to hedge against your portfolio. You can use the option market if you know what you're doing. I mean, that's what we do. We use the option market. I mean, but the only true hedge against real inflation is precious metals. That's the only that's going to be tried and true. And I would suspect that cryptocurrency might be something, but not quite as safe and tried and true as the metals. But certainly, if you're an equity holder, using options against your portfolio and creating a back ratio spread to determine risk is very easily done, and that will protect you against any major move. I mean, I know my portfolio has got a maximum risk of 4% between now and March, so I'm not worried, and I'll continue to accumulate assets between now and March.
Give us one trading New Year's resolution for us, Bubba.
I think the one resolution for everybody is invest what you can afford to invest. Be very careful with the leverage that you use, because one of the biggest problems with leverage is if it goes for you, it's great. If it goes against you, it wipes you out.
What about for yourself? I know you're probably too advanced to follow that particular advice, or maybe
I
you
follow
still
that.
do,
Listen, I've made the mistake before. I've gotten over leverage. I think that you just have. I think you have to invest with money that you can afford to go against you. You have to be able to afford the drawdowns that come in any cycle of markets. Okay, because I don't care how good of a trader you are, you're going to have drawdowns.
It's very good to see you again, Bubba. We're going to get you back on the show ASAP in 2026. Have a happy New Year, happy holiday season, and we're looking forward to it. Thank you.
Happy holidays, and thank you so much. I appreciate it.
Where can people follow you before we go? Where can we follow you?
BubbaTrading.com, and I do a daily update about 2 minutes every morning. I give you what I'm thinking. Anybody who wants that, they can certainly email me at bubba@bubbatrading.com. And just one more thing, if you're talking with you, I've written 2 books on option trading, which I'll give the PDF file to anybody in your audience who would like to have it. All you got to do is email me at bubba@bubbatrading.com.
All right, we'll put the links down below, bubbatrading.com. Make sure to follow Todd Bubba Horwitz there. Very good to see you again, Bubba. Happy New Year again.
Happy holidays. Thank you, man. Great show. I always appreciate it.
Thank you for watching. Don't forget to like, subscribe, follow Bubba. Links down below.